about one of those today. Arvind SmartSpaces is on our radar for quarter one. Companies saw improvement in both bookings and collections on a YOY basis. They say that quarter one performance is driven by majorly sustained sales in private placement to land partner. Kamal Singal, the MD and CEO at the company, is joining us now. Mr. Singal, good afternoon. Thank you so much for joining us. Well, it's a 200 crore quarterly run rate that you've seen this time around. Do you think you'll be able to improve on it in the coming quarters? Because last year you did around 1100 crore of sales. What's the outlook for FY25?
Sure. Good afternoon. As you very rightly said, we did 200 crores for the quarter, and last year it was 1100 crores for the year as a whole. But I think we are, in any case, the way the launches are planned, a little H2 heavy on all the launches and fresh inventory coming into the sales pipeline, and hence we're quite confident that we should be able to catch up. And the year as a whole should look at a very decent kind of growth over 1100 crores that we did last year.
Could you just quantify that? You spoke about, there is going to be execution. Could you give us a sense of, in FY25, which are the projects where you will be able to go ahead and recognize revenue? And if you could quantify that in terms of FY25 top-line figures.
Sure. In terms of financial numbers, normally we would not give guidance on that.
We understand that. So what is the launch pipeline where you would be able to recognize revenue?
So launch pipeline is pretty healthy. This year we are targeting a launch pipeline of anything between 2300 to 2500 crores of inventory in the remaining part of the year. This includes 3 major projects in the city of Ahmedabad and Bangalore. These are fresh projects, very large size projects, and we are only counting the phases that will be launching from these projects, amounting to 2300 to 2500 crores of fresh launches. And then we will also have sustained sale coming from the existing projects which are already launched apart from these new ones. So put together 23 to 2500 crores is the launch pipeline that we have for this year, for the remaining part.
Okay. And how much would convert to bookings, Mr. Singal? I ask you because you've seen around 41% CAGR over the last 4 years, over the last 5 years, that is. Last year you closed with bookings growth of 40%, the collections grew by 46%. Is that something that you'll be able to continue?
Last year was an extraordinary year, and we are generally consistently growing to the extent of 25, 30%, 35% thereabouts on all major parameters, including fresh bookings. So over 1100 crores, I think 30% growth should be something that we should be targeting, and we are targeting. So that kind of growth we should be able to see this year again.
Okay. Mr. Singal, what's interesting about, your particular model is that typically you don't go ahead and buy the land bank. So now, since you're going ahead and going into different geographies like Bangalore, will you change your strategy and also give us a sense of the launch pipeline that you have in Bangalore and what other geographies you're targeting?
Sure. So we are doing outright deals, we are doing JDs, we are doing JVs. So all these models are extremely important. Of course, we are asset light as a company, and hence JD share in the overall scheme of things is higher than outright purchase. But going forward in the next 2 to 3 quarters, I think we'll see quite a bit of action happening on outright deals as well. And a lot of this investment will go into the markets of Bangalore as well. We are targeting to launch at least 2 new projects in the remaining part of the year in Bangalore, and at least 4 to 5 projects in Ahmedabad. So going forward, it's going to be a mix of JD and outright, and will remain heavy on JDs, as you have very rightly said.
Okay, and you've been talking about some land buys that you will be looking at in FY25 and other years as well. So, Mr. Singal, in that case, how do you fund that? You have said that there is enough room for you to take up debt as well. You are net cash right now. You have entered into partnerships with other financial platforms. So, what is the plan with financing all these projects now, and what would the amount that you need for these expansion plans?
We have 3 sources of investments. One is obviously the internal accruals, which have been very strong. In the last 24-25 months, we have accumulated more than 800 crores of free cash from operations itself, and the healthy trend of this internal accruals continues. So that's one source. The other obviously is the debt raising capacity that the company has. Today we are net negative debt, 50 to 60 crores thereabouts. But even a very conservative level of debt raising will mean that we can raise 300 to 400 crores within this financial year to fund the new pipeline. And apart from that, 300 to 400 crores can be invested through the platform we have with SDFC. So all put together, 800 to 900 crores is something that we are looking to invest on an imminent basis next few quarters. And that should be sufficient to create a pipeline in excess of 5,000 crores for the for the company in the next few quarters. So that's what the target is, 800 crores thereabouts of investments through these three sources, and which will create 5,500 crores rupees of fresh inventory for sales to continue.
Okay, so you've spoken about debt and how you plan to fund the capex. Now, in 2021, you had a preferential issue from HDFC Capital Advisors. They hold almost 8.8% stake in the company. Now, going forward, how do you plan to go ahead and take this particular partnership forward, and what will be the contribution that you have with them in the projects that you all do joint?
So HDFC has been a very, very long relationship, not only at our company level, but also at the group level. It's a very, very long-standing relationship. They were the primary banker when we started real estate as a business. Then we had a platform deal with them, which was platform one for us. Then it evolved into a partnership where they participated at the holdco level and picked up 8 to 9% of equity of the company, as you said. And thereafter, we created platform two, which is of something like 900 crores thereabouts, which is under investment at this point in time. So this partnership has always been growing qualitatively and quantitatively, and we are building on this partnership further. So once we are exhausted with the current platform money, obviously we will be looking at more avenues to work with them and invest further into future projects.
Okay, all right. So we'll speak to you again when there is an update on those projects. But Mr. Singal, it was a pleasure. Thank you so much for joining us and speaking with us about the outlook going forward. That's the word coming in from Arvind SmartSpaces, expecting around 30% growth. And they do have a strong launch pipeline that will convert into bookings this year itself. Slip into a break. When we come back, we'll be joined by the management of Capital Small Finance Bank to discuss the quarter gone by. Stay tuned.